Welcome to Finpod, your daily financial digest. I am Evan, and I am glad you are joining me today. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get into what is moving the markets today. The conversation is dominated by the semiconductor sector. ALAB is seeing some pressure, with shares down over 4% in pre-market. This follows a period of heavy insider selling and general volatility in the AI infrastructure space. While the company's growth story remains a major point of discussion, traders are clearly taking a cautious approach after recent index rebalancing and broader sector weakness. Similarly, SanDisk is down about 6% this morning. This move is largely a sympathy reaction to a sharp sell-off in South Korean chipmaker SK Hynix, which has rattled investor confidence across the entire memory chip complex. Even with analysts like Goldman Sachs reiterating bullish targets, the technical selling pressure is winning out today. Advanced Micro Devices is also feeling the heat, trading down nearly 3% pre-market. It is part of that same broad-based pullback in high-beta tech stocks. Investors are looking ahead to its upcoming earnings, but for now, the market is focused on broader macro headwinds. Meanwhile, Taiwan Semiconductor is relatively flat, holding steady despite the sector-wide nervousness as investors wait for its upcoming earnings report later this week, which will be a critical bellwether for the entire AI hardware supply chain. Finally, Snowflake is bucking the trend slightly, up less than 1%. The narrative around Snowflake has shifted recently, with more analysts pointing to its growing importance in enterprise AI data workloads, which is helping the stock find some support even while tech peers struggle. Looking at the broader market, we have a bit of a tense start to the week. U.S. index futures are trading lower across the board, with the Nasdaq leading the downside. The primary catalyst is a flare-up in geopolitical tensions in the Middle East, specifically reports of renewed military strikes near the Strait of Hormuz, which has sent oil prices jumping over 3%. This is putting a damper on risk appetite globally. Additionally, we are seeing some lingering anxiety regarding inflation, as a surge in AI-related data center spending is being flagged by economists as a potential driver of higher costs for power and hardware components. Investors are keeping a close eye on upcoming macro data prints, as the market looks for any signs of how these capital-intensive investments might influence Federal Reserve policy. In the AI economy, the theme remains infrastructure. We are seeing a massive build-out in data centers, with estimates for total investment this year topping $700 billion. While everyone is focused on chip makers like NVDA and Broadcom, the conversation is broadening to include the downstream impact, specifically the power grid and specialty automation equipment required to support these massive clusters. A group of leading economists and researchers also released a statement today, urging policymakers to accelerate their planning for the economic transformation AI is bringing, signaling that the industry is moving from a pure hype phase into a period of deep structural integration. For stocks in focus, aside from the chip names we already touched on, the bank sector is starting to grab attention. We have earnings reports from regional players on deck, which will provide a look at loan demand and credit quality. Investors are also watching closely for any updates on capital return programs, as higher interest rates have created a complex environment for these lenders. Generally, the market is looking for stability in these reports to see if the broader economic momentum is holding up. On the earnings front, we have a few names reporting today. FB Financial is scheduled to release its results after the close. The market will be watching its net interest margins and any commentary on regional economic health in its footprint. Bitmine Immersion Technologies is also in the mix, though its focus remains heavily tied to its aggressive accumulation of Ethereum, making it more of a proxy for crypto sentiment than traditional banking. Keep an eye on those after-hours moves to see how the market digests these updates. That is it for today's episode. We covered the chip sector sell-off driven by global macro concerns, the massive scale of AI infrastructure spending, and the start of earnings season for regional financials. If you found this update useful, please like, share, and subscribe, and leave a comment if there is a specific stock or sector you want us to cover. For stock recommendations, visit Fintwit.ai. I am Evan, and I will see you back here tomorrow.